Hey, this is June from Turning Point Life Investment. This is your market analysis for January 23rd, 2010. So it's pretty obvious we've established a top for the market right around the 115 area. And I've mentioned last week that the market was showing signs of a topping process, and we pretty much got that confirmation. We had 3 straight days of selling, both of them on very, very huge volume. The first thing you want to notice is we've pierced and broke through this 50-day moving average. Um, so that's pretty significant considering that we haven't exactly pierced or at least a major break of this 50-day for quite some time, especially on such high volume. I also mentioned last week to be mindful of this trend line, of this uptrend line that the market has touched 3, 4 times. And as you can see on Thursday, I believe, on Thursday we clearly broke this line and we got some major follow through on Friday. Okay, so knowing the fact that profit taking or selling has occurred, what are you going to do? Okay, so let's take a look at what's possible for next week. Now we've had 3 straight days of selling, I've mentioned. Most of the time when you see something like that in any direction, we could expect some kind of counter moves just to relieve the over extreme conditions. The first thing that pops out is that the market is pretty oversold on the short-term hourly view. Now another thing is we are very, very stretched out from the moving averages. And I think I've mentioned this in my prior videos that when the market gets really, really far away from the 20 moving average, it needs to come back, right? It needs to come back, snap back, and touch the 20 just to alleviate itself from this extreme condition and also to get out of this oversold. So there's really two possibilities for that to happen. The first one is for the market to just meander sideways, just go sideways, and allowing this 20-day to come down and meet or touch the price. This also will allow prices to come out of oversold. The other scenario is a snap back, a snap higher up to touch this 20-day here. So both scenarios are likely possible. I would prefer a snap back, okay, just to correct some of the price. As far as price targets, I would expect some kind of resistance around the 111 area, all the way up to, I will say, 112 and a half. So somewhere in this zone, we should find some kind of resistance around here. Not to mention, since that was the previous low back in the last, I think that was December 31st, the last day of 2009. So somewhere around here, we should find resistance. Now, as you can see, the market dynamic has changed. We're no longer buying the dips, right? Just like how we had before. Now it seems like we're selling on the rallies. Now we have lower lows and lower highs. So we're going to assume that that is the case until it's proven wrong. So what we're going to wait for is some kind of bounce to the area, to this area, as I mentioned. If it holds as resistance, then this could be a very good shorting opportunity for another leg lower. For me, I feel like this is just the first leg down. We need another leg just to correct this extreme condition, and then we can start the next leg lower in this correction. So if you're planning to short the market, I would suggest you're a little bit late. Wait for some kind of bounce higher. Wait for prices to come back around this area before you can short again. At least that's what I'm looking for. Okay, next going into the VIX. Now the reason why I say we can expect some kind of correction, some kind of relief rally next week as well, simply look at the VIX. We had two very, very huge up days, right? Last week I said this was a very suspicious, almost like a capitulation move to the downside. And then I wanted to look for some higher highs and the higher lows. Well, we definitely got the higher high, broke through some major resistance on the VIX. So volatility is definitely creeping in, or at least rushing into the market. You will probably notice that option premium is a little bit higher now. So if you're going to be an option seller, right now would be an ideal condition because at least premium is a little more beefed up currently. So as I mentioned, I do expect some kind of pullback on the VIX, and if that is the case, just to alleviate some of the fear, some of the anxiety that's been going on in these last 2 days, if that is the case, then we can expect some kind of bounce, some kind of relief rally in the market. So overall, just to recap, as I mentioned, look for the 111 and a half, 112 and a half, somewhere around here, around this zone. that would make for a good shorting opportunity. As long as it holds in this area, then that would be a good entry to go short again in this market.